Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York on Wednesday, February 17th, 2016, and we are looking at a Dow Jones Industrial Average that continues to rally now, really for the third day in a row, trading up about 241 points today at 16,437. The low has been 16,217. The high 16,434. So we are trading on and near the highs of the day today. And as I said, a substantial rally indeed. When we take a look at the Standard & Poor's 500, of course, that is also showing us a substantial rally. Currently trading up about 32 points at 1921.50. And that, of course, is vis-a-vis the E-mini. Let's go ahead and take a look at the E-mini chart. You can see on a weekly chart the kind of move that we've seen opening up at the beginning of this week, well below 1900 at 1866, now trading at 1921. We certainly want to convert this to a daily chart to give us more information. Let's go ahead and kind of uncompress this chart so we get a little bit more in terms of data points. And you can see that we do have a gap that came into the market. That might come back and get filled. But if you recall from yesterday's show, we did put out a soft recommendation. And what I mean by soft is that we didn't actually send out a trade alert, but I have received emails from many of our subscribers that did enter that. We talked about where stops should be placed yesterday, and we talked about placing them under these lows right here at about 1860, 1861. You can definitely go ahead and move those stops up to below the low of today, and the low today is at about 1879. Of course, the market is trading strongly above 1900. And as I said on yesterday's show, my sense is that we shouldn't have any difficulty seeing this market move back up to this particular price point, which is a 61% retracement of the move down at around 1940. Now, we are quickly approaching that, so I'm not going to send out a email trade alert because I want to see how the market reacts at this point. For those that haven't entered the market yet, I'm not convinced that it's safe. I would be convinced if we had a solid close above 1938, because what that would tell me is that the next real move in the market is going to be based on some resistance coming in at around 1980. And this is basically based upon a series of lows that we saw in the marketplace as the market was really tracking sideways, meaning it was hitting these highs at about 2100 plus, coming back down, attempting to hit these highs, coming back down. Of course, you get a lower high here and then a break. Once the market did break below these lows, of course, we had a solid breakdown. And this, of course, is part and parcel of the meltdown that we saw really at the end, the culmination of 2015. This is the mark here. But at the end of 2015 into 2016 till about the middle of January, in which we saw our first clip up, our final plunge down, and then a last move up. Now, that to me is exciting, and the reason it is exciting on a technical basis is let's take a look at what happened, of course, back during the August meltdown, which is right here. This is August of 2015. The market hits these lows and then stages a rally, but the rally is short-lived. It's roughly a 2-week rally, maybe 3-week rally in which it hit those, and then it came down, and it did hit a higher low, but then from there it was off to the races because it went to challenge these record tops here. Now, the reason I said exciting is we came down, we did hit these lows. Of course, we breached these lows on the second turnaround, but we hit these lows. We came back up to a top similar to this activity, although it was a lower high in terms of the top, then came back down. We did actually make an equal low to this particular point, and now we're moving back up. So the one thing that I can say is that if you can see this W right here, you can also see this W right here. And that tells me that we could be looking at a similar circumstance to what we saw back last year in August, September, into October. Of course, October is where we really began to rally. right here, and that took us through October. We had a tremendous rally in October, kind of ended in November, as you can see, but we had a tremendous rally off of that took place and lasted roughly a month and culminated back above 2,100 on the S&P. So we're getting that W again. Let's see how the market reacts if, in fact, it continues to track back up. For those that are long, maintain your long position. For those that are waiting for an actual trade alert signal to be issued, as I said, at this point, I want to see how the market reacts in this area. If it can break through this particular resistance level, and I'm earmarking resistance at 1938, I think we're off to the races, and we've got a real shot to move back to 2,000 on the S&P 500 vis-a-vis the E-mini. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.